podcast. We have Vivek Loya, Managing Director at Jupiter Wagons, joining us. Time for some corporate conversations here. Vivek, great having you. Let me first try and understand what's played out in Q3 because your numbers were softer when I'm looking at them YOY. Of course, QOQ, we've seen a bit of a pickup, but give us some perspective. What happened with regard to where the top line is concerned?
Yeah, good afternoon. The biggest challenge for us is the availability of wheel sets. So that has been a challenge throughout the year, and that continues to be a challenge, though the order books is still quite strong. But the wheel set supplies have improved. If you look at Q1, Q2, comparatively, Q3 numbers are much stronger because we have had better supplies on the wheel set availability. So going forward, I think this year we expect some supply disruptions to be there that will have some impact on the numbers. But by end of this year, our own capacity, which we are setting up in Odisha, we are setting up a capacity to produce about 1 lakh wheel sets annually. So once that comes online, then I don't think these challenges would continue to remain.
Thanks, Vivek. When does that come on stream?
We expect by end of 26 or beginning of 27, the capacities to start coming online. And by middle of next year, we expect to be that facility to be running at full capacity.
You're saying end of calendar year 2026, beginning calendar year 2027?
Yes, absolutely.
Okay, and so till then, your numbers will continue to face some headwind with regard to unavailability of wheel sets?
Yeah, on the wagon numbers, yeah, definitely there will be some impact. But if you look at our other businesses, those are continuing to do much better. Those numbers are continuing to become stronger. Our the wheel sets which we are already producing, Aurangabad, that we are running at full capacity there. So we expect to double our revenues this year itself. We should be above 500 crores. Next year, we should be touching about close to 1,000 crores there. So other businesses will pick up some of the slack. But yeah, here definitely there will be some challenges.
And Vivek, hi, good afternoon. In the meantime, while you have this in-house manufacturing facility and the numbers of the trains, the tire sets, they come ahead, talk to us about what happens to the margins in light of this shortage. And while you say that the other businesses could pick up the slack that is being seen in this segment, how would that shape up your margins? Because we've seen a cut on the margins this time around. What could be a good level to expect going ahead?
So going forward, I think there will be improvement in margins because we are focusing. If you look at our order book, close to about 50% of our order book is from the private sector, and there, we mainly rely on our production of our own wheel sets. So we are not dependent upon Indian Railways. So we are now focusing more on that segment, and we continue to grow there. Our order books are also improving there, and we are one of the market leaders in that segment. So with renewed focus in that segment, you will definitely see some improvement in margins going forward. As I've told you, on the wheel business and on the auto business, those are also showing a lot of traction. So there we expect margins to improve. As by the end of this year, once our wheel facility goes online, again, a lot of that capacity is reserved for exports to the European market, where we have really welcomed the free trade agreement. We are working on CBAM very closely. So we are gearing ourselves for that, to be ready for that, because that's also going to play a very important role in our exports. And with our relationship with Tatra and the investment in the wheel business, I think the export part is something we are very bullish on, and we expect a lot of traction to come on the export side also.
Okay, interesting. And Vivek, when does that significant pickup happen? Does it only happen, say, calendar year 2027, given the kind of challenges and the headwinds you're facing?
So yes, I think 27 is when you're going to see a lot of the momentum shift happening. We also expect Indian Railways to come out with a sizable tender before that. So I think with the new order book, expectation of the new order book coming in, with the capacities getting increased substantially, we are by this year we should be also entering the passenger segment of the rolling stock business, because as you're aware, the government is very focused there. So we are in advanced talks with one of the leading players in the European market, leading producers of passenger cars. So you would see Jupiter entering that segment also in FY 26, 27. So, so going forward, I think there is a lot of traction on the business side.
Vivek, so therefore, in terms of growth, when it kicks in calendar year 2027, talk to us about what kind of a growth will you clock? Because your capacities are already set up. It's just about Wheelset coming on stream for you, and you've done it through an acquisition of sorts, if I recall right. So once Wheelset comes on stream, the ramp up should be fairly significant. And talk to us about two things therefore. One is what is the top line growth you clock? Second is what is the capacity utilization you can ramp up towards?
So if you look at calendar year 27, I would say that the wheelset business in 27, 28, the wheelset business should give us revenues of anything between 1,000 to 1,500 odd crores of incremental revenues. Other businesses should result in about 5 to 600 crores of incremental revenues, and hopefully by that time we will have new orders from Indian Railways. So the wagon revenues should be on track. Availability of wheelset, I said, would not be a challenge. So definitely, I think we are looking at least 20 to 30% increase in both our top line as well as in the EBITDA margins.
Okay, so that sounds optimistic, and we'll catch up when that happens. And of course, in the interim, we hope to keep speaking with you. Thanks so much, Vivek, for your time.
Thank you.
Okay, we were shifting focus from